Ladies and gentlemen, good day and welcome to Mech Projects Limited Q2FY25 earnings conference call hosted by Nirmal Bang Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Natasha Jain from Nirmal Bang Institutional Equities. Thank you, and over to you, ma'am.
Thank you, Darwin, and good afternoon to all participants. Nirmal Bang Institutional Equities welcomes all of you to the second quarter FY25 earnings conference call for Mech Projects Limited. From the management today, we have Mr. N. Aravind, Chief Financial Officer, and Mr. F. Kodandaramana, Director Business Development. I would now like to hand over the call to the management for their opening remarks, post which we shall open the floor for Q&A. Thank you, and over to you, sir.
Yeah. Thank you, Natasha. So, I have with me Mr. Ramaya, Director Business Development, and Mr. Rohit Sajja, President BD and Operations. So I'll request Mr. Rohit to start the opening remarks, and then I'll start the presentation.
Good afternoon, everyone, and thank you for attending the investor call. So I would like to start by giving an overview of the order book initially, and also a picture of the new order inflows that we're expecting for the rest of the year. And then we'd like to touch upon the mining operations briefly, and I'll hand over the call to Aravind to talk about the numbers. So this year we are targeting an order intake of around 12,000 crores across various sectors, namely power, non-power, civil infrastructure and water sectors. And as of 30th September 2024, we have secured orders worth 3,100 crores. With the total order backlog, taking the total order backlog to 58,000, a little over 58,000 crores. And excluding both the MDOs, our unexecuted order book stands at 18,402 crores. And we have bid for, there are 8,900 crore worth of projects in the pipeline that we have bid for, and these are expected to be announced, the results of these projects are expected to be announced in the next 3 to 4 weeks. And apart from this, we are also seeing over the last 1.5 years, we have been seeing a considerable amount of growth in the power sector, and with close to 80 gigawatts of capacity addition planned by 2032. Of this, around 37 gigawatts has been tendered, and around 43 gigawatts is yet to be tendered. This translates to a potential opportunity of 86,000 crores for Mech in the civil and mechanical workspace, and that too only the construction. This includes both the boiler turbine generator areas and also the BOP civil and mechanical areas. And we are also targeting the BOP EPC space, which would translate into an opportunity size of 2.1 lakh crores for the next 4 to 5 years. And apart from this, we are also actively exploring a few opportunities in the green hydrogen space, especially the SECI tenders that have come up for the green hydrogen derivatives. So this, again, we have tied up with a few electrolyzer manufacturers, and then we are in advanced stages of forming partnerships with them. So looking ahead, we expect to expand our order book in line with our growth plans over the next 5 years, focusing on our core sectors like power and infrastructure, while also diversifying into green energy. And talking a little bit about the MDO business, we have made significant progress over the last 1 year in both the MDO projects. And this year we have the Tasra mine, we have secured the first Kotre Basanpur mine. We have secured all the permissions, and we are about to break ground probably in the next 3 to 4 days. We have secured the forest clearance also to start with the tree felling activity. So we expect to extract the first coal produce in the month of January or February this year. And Kalyaneshwari Tasra is also gaining momentum. We have completed equipment mobilization for initial mining activities, and also received environmental clearance for setting up a 3.5 metric tons per annum capacity washery. And we have till date we have done an OB removal and coal production of approximately, OB removal activity is going on. We have done around 382 tons of coal production. Now I request Mr. Arvind to update on the Q2 and half yearly numbers.
Thank you. Good afternoon to you all. The performance for quarter 2 and 6 months for the financial year continued as per our same targets for the entire year. The reported total income for Q2 financial year 24-25 is rupees 1035 crore against 937 crore in Q2 FY24, an increase of 12% year on year. EBITDA is 134 crore as against 118 crore as growth of 13%, and PAT 67 crore which has grown by 31% compared to 51 crore in Q2 FY24. So on quarter to quarter basis, Power Mech has demonstrated improvement in overall margin profile. EBITDA margin has gone up from 12.57% in Q2 FY24 to 12.78% in Q2 FY25. PAT margin has gone up from 5.47% to 6.43%. So revenue mix for the quarter 2 FY25, mechanical business has contributed 229 crore against 148 crore in Q2 FY24, showing an increase of 10% growth. Civil business including railway, water distribution contributed 395 crore against 496 crore in Q2 FY24, a decrease of 20%. O&M revenues are 391 crore against 272 crore in corresponding period last year, registering a growth of 44%. Electrical business 9 crore against 17 crore, a decrease of 47% year on year. Mining business 12 crore against 0 in Q2 FY24. Other income 10 crore against 5 crore in Q2 FY24. So during the quarter 2 FY25, the distribution between domestic business and international business is 95% and 5% respectively. Contribution from the power sector remained at 66% and non-power contributed 34%. Similarly, the total reported income for 6 months of FY25 stands at 2062 crore against 1808 crore in of year FY24, an increase of 14% year on year. EBITDA is 257 crore against 223 crore, a growth of 15%. PAT is 127 crore against 102 crore in off year 1 FY24, a growth of 24% year on year. So on off year to off year basis, Power Mech has demonstrated improvement in overall margin profile. EBITDA margin has gone up from 12.31 in FY24 to 12.45 off year FY25. PAT margin has gone up from 5.66% to 6.17%. So mechanical business has contributed, revenue mix for 6 months, mechanical business has contributed 331 crore against 258 crore in off year FY24, showing an increase of 14%. Civil business including railway, water distribution contributed 937 crore against 989 crore, a shortfall of 5% growth. Shortfall of 5%. O&M revenues are 732 crores against 524 crores in corresponding to the previous period, registering growth of 40%. Electrical business 17 crore against 25 crore, a decrease of 32%. Mining business 26 crore against 0 during the last year. Other income is 19 crore against 10 crore during the last year. So during off year FY25, the distribution between domestic business and international business is 94% and 6% respectively. Contribution from the power sector mentioned at 60% and non-power contributed 40%. So the financial parameters are concerned. Net current days excluding cash and cash equivalents have increased from 142 days in Q1 to 147 days in Q2 due to delays in certification of the works and delays in realization of receivables from the water division, resulted the small increase in the current assets of the company. The debt levels are in control. As on 30th September, the gross debt is around 611 crore and the net debt stands at 64 crore. The debt equity ratio as on 30th September 24 stands at 0.34 times. So now I request Mr. Ramay Garu to update on the developments.
Yeah, good afternoon everybody. Good afternoon Rohit and Arvind, my other colleagues here. Thanks to this call today. I think Rohit has given an overall picture of where the company is going in terms of the growth patterns and then the revenue side and also the opportunity side in future. And Arvind has given the financial numbers. I think we should continue to be bullish on the market opportunity and availability of opportunities and also the bidding opportunities available. The overall order backlog, the beginning of the year was 17,362 crores. It has gone up to 18,402 crores, an upstairs of nearly 6%. And the bulk of the booking has happened in the O&M side. That is a very positive sign. With the order backlog on the O&M, which was 2197 crores at the beginning of the year, has gone up to 3326 crores, almost 51%. I think O&M is one of the key areas of our strength in the operations for top line, not only top line, but more importantly the bottom line. That is a very positive sign. Of course, in the mechanical and civil, there is not the overall backlog remains more or less the same. And with the overall order booking done about 3,055 crores in the first 2 quarters. The domestic order backlog is around 98.7%. The international operations are 1.3%, mainly related to a lot of O&M jobs which we are pursuing in the Middle East and also West Africa. And the power sector order backlog is about 68%, and the non-power sector is about 32%. That shows very well that the power sector is driving the growth and the opportunities are available. Of course, now power sector is more comfortable. Non-power sector is the opportunities which we have entered in a big way in the last 7-8 years. That continues to be of importance to our growth strategy. But some of the key areas of the developments I can say to start with on the power sector, I think we all know the market is becoming very bullish. With the flood of orders coming out, and obviously this is linked with the huge demand gap which can happen between the coal power and also non-coal power, that is the renewable power, which is expected to widen the gaps by 1930-32, leading to grid disturbance and also a lot of power outages also. As a precaution, government has taken a lot of advanced actions in terms of ramping up the capacity of the coal-based plant to work as a backup on a baseload operation, and that is why the flood of orders are coming out. And we have seen in the last 10 months to 1 year perhaps, beginning with Lara, where BHL has taken the NTPC order, and then followed with the Talcher, Singrauli, then Talvira by NLC, Navy Irrigate Corporation, Yamunanagar by HPCL, then a flood of orders from Adani side. Totally Adani has ordered about 10,920 megawatt in the last couple of months, mainly on BHL. And then NTPC has ordered about 11,580 megawatts. This I am giving a background of 1 year, and then a lot of things have happened in the last couple of months and all. And then HPCL, 1 unit of 800 megawatt, DVC at Kodarama, 2 units of 1600 megawatt, then NLC Talvira, of course that project is going a little bit slow. Therefore, that shows the power sector, the ordering status has gone up to almost 1,28,000 crores for the BHL itself. Therefore, BHL is flooded with orders, and recently the development is the bulk orders which they have already called for this one, Nabinagar, Gadarwara and Telangana. Totally 8 units. That L&T was L1, but as a part of the tender conditions, there was an opportunity available BHL to bid in one of the projects, and they have taken the L1 that has already been confirmed now. That is Telangana project, around 1,600 crores. Therefore, overall ordering which has been done by all these customers, Adani, HPGCL, DVC, NLC, NTPC, for about 35 sets, comprising 27,300 megawatt, comes to almost 1,55,000 crores, because about 27,523 crores is for the L&T, which will be confirmed because they have been asked to go ahead with the working, and then BHL 1,28,000. For that indirectly translates a huge opportunity base for us in terms of the ETC business, in terms of civil work, structural works, some of the balance of plant works in terms of coal handling facilities and balance of plant civil works. And then as the more and more sets operated and all gets to commissioning, then O&M opportunities also will go up. On a ballpark basis and a rough calculation, what we have figured out is the opportunity size for the future is about, in the power sector, it can go up to 30,000, more than 30,000 crores in various areas of the installation, civil, structural, mechanical works, and then other areas also. Apart from that, there are BOP opportunities coming because NTPC has taken a principal stand to split the EPC, the overall bulk EPC of the entire plant into two areas, the main plant with the civil and structures in that area and the balance of plant. And for this balance of plant opportunities also will come up and we are in the process of looking at the opportunities in some of the projects like Singareni, which is coming up in Telangana. And then future, when the NTPC comes out, we have to type with some of the partners how to bid for all those things. Of course, Telangana, we are aggressively pursuing that opportunity. That has to come with the BHL because it will be a BHL being negotiated from the Telangana side. We have to see how it will take shape. And then there are other tenders also which have been called for the new EPC and other tenders like OPGCL Orissa, then UKAI Gujarat, then MPGCL Amarkantak, MPGCL Sarni, Singareni, Telangana, that I have told you. Because NTPC has got a mandate to complete their portion of the ordering and also capacity addition to meet the need 2000, by 3032 by end of this decade. Therefore, that will be another 11,440 megawatt on the tendering process. Except 4,800 megawatt, most of the balance tenders will be finalized by end of the year. It should be another 6 months. Should be possible. That will bring up another 20,000 crores of opportunities in the power sector segment itself. Now, on the plate, we have got about 24,000 crores of various opportunities being at the bidding stage and also after submitted in the power plant side, in the drinking water schemes, and then in various other non-power sector segments. That is where Rohit was confident of what is the future. Around 3,500 crores of things should fructify in the next couple of months, 10 to 3 months maximum. And then we are still bullish on meeting the targets based on the opportunity size available with so many tenders which we have done the bidding, around 24,000 crores, which is on the our radar. For these are the major things what we have to say. And then O&M, we have seen a significant improvement. In fact, the improved order backlog of O&M by 50% at the beginning of the year to midway will bode well for improving the top line and more importantly for the bottom line. And some of the key things which has happened is a major project at Talwandi we have taken for 3 into 60 megawatt, 1980 megawatt. That is about 951 crores. This is one of the largest O&M orders we have ever taken in the market. That was a 5-year contract. And therefore, that is why this year the overall O&M order booking about nearly 1860 crores. And that bids well for our future in the growth for the profitability also. And some more O&M projects are also expected in this year, apart from the other segments also, in the railways, and then in the main, I told you about the power sector, and then other infrastructure side. And on a other little bit of a major investments, I can just briefly tell. The steel sector, a lot of investment is going to come up. ISCO Burnpur is coming with an investment of 30,000 crores for a 4.5 million ton capacity, and there can be opportunities in the our side of the work on civil structural installation business. Then Bokaro also is expected to come up with investments, and then Rourkela there is also plan for expansion investments. And there are opportunities in the Middle East also. JSPL is planning to invest 30,000 crores in the 5 million ton capacity in Oman. We have got a presence in the Middle East also, and then Rohit is vigorously pursuing those things. Particularly, we have got a huge HR base also in handling dozens of projects in installation, then maintenance, operation maintenance, etc. And therefore, and we have got a background of having worked for about 7,000 megawatts of combined cycle power plants across the spectrum in the Middle East. That presence and experience should help us to see if new bigger investments come, we can also try to get in there. For this is on the overall perspective. Then the balance investment which will continue to flow in the railways. We expect another couple of years the flow will be there with the huge investments of 1.5 to 2 lakh crores. Road sector more than 2.5 lakh crores. Then drinking water residual orders have to be completed now. Perhaps in the under new Amrut scheme or whatever is where it comes and all. These opportunities also will be available. and now the company is quite diversified, widely spread out, and then we have got the organization also built up. In fact, the present organization strength, both direct and indirect labor, has gone up by about 10% to meet the new businesses which has come, not only in the power sector but also in the wind and other areas. So that is what I would like to say in the start. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Omkar Chitnis from Trade Brains. Please go ahead.
Good afternoon. My first question is, I want to know on MDO business because Geological Survey of India has identified several lithium ore sites, and Indian government has plans to call a tender for lithium ore sites for coming year. So, are we working on developing additional expertise in mining in comparison to the traditional mining operations in India and globally?
Yeah, thank you. Thanks for the question. So right now, our entire focus perhaps is to bring both of these mines to steady state operations or peak rated capacity, which is 9 million metric tons per annum, and we expect to achieve this in 2028. And we are not looking at other mines at the moment, other MDOs or other coal blocks or mining in any other form. And lithium, we did some work on it, and so lithium requires a different skill set, different expertise to mine and extract.
Okay, sir, understood. And my second question is on expansion in global market, particularly US. In the case of Trump administration in the first term, he emphasized more on infrastructure development and energy. Are we expecting same infrastructure development in the second term in the US so that we can get more opportunities to enter US market, and any partnership are you planning in US based firms?
No, sir. No. Right now, we are not looking at US as an expansion strategy, especially for our infra business.
Okay. Okay, so my last question is, earlier you guided a revenue growth of 25 to 30% for FY25. What specific strategies have been implemented to achieve this target, particularly based on the current market conditions and competition, sir?
Sir, we have opening order book of around 17,000 crore, and we have target of, for the current year, we are planning to order inflow of around 12,000 crore, apart from the MDO business. So we have a history of converting the opening order book of 35 to 40% conversion into the turnover. So with that basis, we projected the revenue of 30% growth in the current year. So in 23 also, we have achieved this 30% target from 22 to 23. So that is easily doable target. So we projected that 25%. So we are confident of achieving this number during the current FY25.
Okay, sir. Thank you, sir. All the best for the coming quarter.
Thank you.
Thank you.
Thank you. The next question is from the line of Pritesh Chedda from Lucky Investments. Please go ahead.
Sir, on the coal MDO side, I am seeing continuous delay in the project in terms of execution. So now both these projects, where exactly are they, and for your peak run rates? So how close are you now to generate those peak run rates, or what will be your revenue and PAT out of the two projects combined in FY25 and 26?
Yeah. Yes, the first mine with Central Coalfields Limited, which is a 5 million metric tons per annum one, which we named as Kotre Basanpur. There is a slight delay. There was a delay of 4 months, I think, because of initially there were central elections and now state elections. But right now we are in a position. This week we have mobilized our resources, and we are expecting to start our work any moment. We are just waiting for a last clearance to be obtained, which shall be obtained anytime soon. And this mine, initially we expected to do around 50 crores of revenue this year, sir. So even if we start supplying the first batch of coal in the month of January, if we start extracting overburden in the month of December, which we expect to do by December 1st or 2nd, after the tree felling activity is done. So we are on track to doing 50 crores in this mine. So next year's plan is to increase the capacity to 400,000, and this is also contractual capacity. And when we do 400,000 metric tons, we'll do a revenue of 300 to 310 crores, depending on price variation. And this mine is expected to reach PRC, peak rated capacity, by 2028. So we'll peak in revenues in 2028. And the second mine, which is named as Kalyaneshwari Tasra mine, which is a sale mine, we have already started extracting coal, and we have extracted 380,000 metric tons till date from February 2024 to October 31st. And this trend is only going to increase going forward, and we are, again, SAIL has, we are in terms of washing capacity, we are running a little short because SAIL doesn't have complete offtake of this resource that we are able to extract. But the situation is going to improve from January, February onwards, and we were able to achieve only 30 crores until Q2. But the next 2 quarters, there's going to be a significant increase in revenue numbers in this mine. It may touch 150 to 160 crores. And this mine again is expected to achieve PRC, peak rated capacity, by middle of 2027, 2028. That's when our washery will also be constructed, and we'll start obtaining the full mining fee.
Is 160 crores you mentioned is full year or H2 for sale?
No, X of H2. Until H2, we did already 28.
So it is 160 plus 28. So for full year, it will do 188.
Yes, sir. Yes.
Okay. Can you tell us the PAT number for the Coal India mine next year at 300 crore revenue?
Sir, initially next year, because the PAT is going to be little less until we achieve PRC. It's more so investments that we have to pull in from our side. So it'll hover in the range of 6 to 7%. But once we achieve PRC, the PAT is going to improve significantly, substantially, all the way up to 12 to 13%.
So you will achieve the peak rated in Coal India mine in FY28, right?
Yeah.
And you will achieve the peak rated in SAIL mine in FY27.
In middle, towards the end of FY27 or middle of FY28.
Okay. And this 25% revenue guidance that you give that with the FY25 will be without coal numbers or with the coal, my MDO numbers?
This with including coal MDO numbers.
Including?
Yeah, 5,548 is including coal numbers.
Okay. Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Sandeep Dixit from Arjav Partners. Please go ahead.
Thank you, sir. Just a couple of questions. So, sir, on this guidance of 5,500 crores in the current year. So, if I just work the numbers, we are looking at a 40% revenue growth in the second half. Am I right in my calculations?
Yes. Yes.
Where is this growth coming from? I mean,
see the FGD we have done around 52 crore during the Q2, and the remaining are the new orders we received from in various Mahan and Athena new projects. O&M we received new projects we received during the last year Q1 last year new orders we received from the various projects. And give you the value. 1860 crores. 1860 crores. Yeah.
So basically, the takeaway what I'm taking away is that you have very high visibility on this 5,500 crores number. chances of disappointment are extremely low. Am I right?
Yes.
Okay. So second question was on the mining operations. You mentioned in the previous answer that the margins will be 6 to 7% until you reach peak capacity, peak rated capacity. It's a PAT margin, not an EBITDA margin.
Not EBITDA, it's PAT.
Okay, so okay, fantastic. Thank you. What would be the EBITDA margin in that case?
EBITDA blended will be PRC. When we achieve PRC, it will be blended EBITDA of both the mines together will be around 20 to 22%.
Right. I think you had mentioned that in earlier calls. Thank you very much for this.
Thank you.
Thanks.
Thank you. Ladies and gentlemen, if you wish to ask questions, you may please press star and 1. The next question is from the line of Anant from Mount Intra Finance. Please go ahead.
I just have one question. The inflow is 3,055 crores. However, I see there's a revised order you have included for. Am I right in my calculation or?
Sir, your voice, we are unable to get you. Can you?
Hi, can you hear me now?
Yes, little better, yes.
Yes. So your order inflows are at 3,055 crores for up till H125. However, I see there's a revised order of 593.99 crores from Uttarakhand State Jal Nigam Limited. Is that also included in this current order book?
Which project you are referring, sir? Which order?
A particular order, 594 crores from Uttarakhand State Jal Nigam Limited. You disclosed it on 22nd July 24. So this seems to be a revised order. And as per my calculations, this is...
Yeah, 230 crore revised order is there, so that is also included.
So essentially there's a double counting, right? Because this order was received in April 23.
No, my opening, I have taken only the difference value of 230. The change of scope value only I have considered in the present orders.
Okay, thank you.
Thank you. Ladies and gentlemen, you may press star and 1 if you wish to ask questions. We have the next question from the line of Prateek Shah from Nirmal Bang Equities. Please go ahead.
Thank you, sir. Thank you for the opportunity. Am I audible?
Yes, sir.
Yes, Prateek.
Yeah, sir. My first question was regarding to the recent slowdown in the steel sector for the last 3 to 6 months. Have we received any order booking from JSPL that we were expecting, or we are expecting any delays in the capex?
Yeah, I think this ISCO Burnpur is taking shape. Actually, they are first focusing on the supply orders because supply, we had some discussions with some of the Russian companies also. Of course, their qualification issues are there. But the construction and the construction partner contracts will follow another 4 to 5 months. Maybe it will follow up, and there can be a lot of opportunities about nearly 4,000 to 5,000 crores. Of course, we have to see which are the projects, which are the packages of importance to us there. And but these investments are on the firm footing. I think ISCO is they have taken on a firm footing, and then Rourkela also will come up. Rourkela, they're going to expanding on material handling and other sites also. And then Bokaro, we have to say, of course, overall outlook is that, SAIL wants to develop the capacity from 25 million ton to 50 million ton, something like that. And that is there. Therefore, and then JSPL, what I told about Oman is a firm investment. They are committed under Vulcan Steel, fully invested to be done by the JSPL. And we can take a call based on the opportunity and also what is the type of work that will be available, which can be doable by us. Of course, we got a reference of having done the work in steel plants in Dolvi, Ballari, and JSPL Angul. And with those references, we can make a try.
Okay, got it, sir. My second question was for the capex for Power Mech for 25 and 26. Could you give any guidance on that?
To meet our regular revenue growth targets, we are increasing the capex of normal assets of around 100 crore capex increase we are expecting, sir. Apart from that, we received the washery environmental clearance approval. So there is a requirement of 690 crore overall capex plan for the washery setup for Tasra project. So over a period of next 2 years time, we incur this 690 crore overall capex in our Mech books.
Okay, that was helpful, sir. That's it from my side.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. We have the next question from the line of Manthan Zaveri from Nexa Securities. Please go ahead.
Am I audible?
Yes, you're audible,
Yes,
sir.
So my question was regarding the order inflow. So we are guiding as of now between 11,000 crores to 12,000 crores of order inflow. And as of now, till date, we have received order inflows of just 3,000 crores. So what gives us confidence of achieving in H2 or remaining 7 months of this calendar year?
Yeah.
Are we expecting any large orders?
Yeah, 24,000 crores of opportunities are on the track. It is a combination of power plant side, and then the non-power sector, the infrastructure side, then metro side, drinking water schemes, etc. Around 3,500 tons are on the firm side should happen in the next 1 or 2 months. And then the other things also should come up. And actually in the power sector also about the new flood of orders should come up, because all this ordering which has been done by Adani, they are making a lot of inquiries. They are interested in our partnership and all, and we are working in Mahan and the new projects in Raipur, Raigad, Bijapur, and also Kawai. All these projects will definitely come up shortly, because they will take a faster decision. And then BHL with a total order booking this on the power sector itself about nearly 1,28,000 crores. They also have to do a lot of fast tracking in the ordering also. Therefore, there also it's expected. Therefore, what happened in the first 2 quarters, so there was some slackness mainly because of the elections, the main elections, and then the state elections and all. For the 3rd and 4th quarter things, last year also similar thing happened. The order improved in the 3rd and 4th quarter. And looking at the opportunity size only, we are still confident of those numbers.
Fair enough, sir. And sir, on the MDO side, so what can be the expected revenues at peak capacity in FY28 from both the mines?
2,100 crores, sir.
And this could be achievable in FY28 from both the mines?
Yes.
Okay. And the other thing was regarding the Adani FGD orders. So are the FGD orders still slow moving, or is there any traction reinstated?
No, as on today it is going on. Nothing, because we all know it is sub judice, matter is sub judice. There are certain views expressed by different people, segments of the government also. Ultimately, the call has to be taken by the Supreme Court. But what we can say is that, NTPC has taken a firm decision to implement 58,000 megawatts of FGD implementation. Therefore, there is a background of that, and we are doing Udupi project of 963 crores. And that some 300 crores of conversion should happen in this year. Therefore, till anything has to come very firmly from the judicial side, we will take it that these things will stand. And I think there is a lot of sensitivity attached to this aspect of the environmental issues. Therefore, Supreme Court also will take a very measured decision on that. I think till then we don't want to make any views except saying that we will be proceeding with whatever things are available.
Okay.
Yeah,
and hello.
It is to some extent, yes, it is slow moving because of the ambiguity attached with the Supreme Court judgment waiting, and also some of the recommendations made by some of the government agencies.
Okay. And so, of the Adani FGD order of 6,000 crores, which was approximately 6,000 crores, how much execution has been done?
Right now we are operating only Udupi project, sir. We have done roughly around 180 crore worth of work we have executed, and we have
200.
Yeah, roughly 200 crore of worth of works we have executed so far.
Okay. So this order book of currently 17,000 crores, how much will be the FGD of this component of the 17?
If you keep aside the ODP project which is running, the balance 4,200 crore is the other orders are there, sir. Kawai, Tiroda and other projects.
Yeah.
Okay. So
Out of 18,000, 4,200 is all these other slow-moving projects.
Without FGD, there is around 14,000 crore orders are available.
okay, and 14,000 crores, if we end FY25 at approximately 15 or 16,000 crores, X of slowing moving, and we expect 30% or 40% of conversion of these orders in FY25. Is that correct?
Plus the addition of the new year, target of 11,000 addition will be there for the current year.
Okay. Okay. Done.
Out of 3,000 only we received, so another 9,000 we are projecting the current year receipt.
Okay, fair enough. Thanks. Thanks a lot, sir.
Thank you. The next question is from the line of Tanay Rasal from Nomura. Please go ahead.
Hi, sir. Am I audible?
You are audible, sir. You may proceed.
Yeah. Sir, thank you for the opportunity. So my question was relating to the thermal power plant that was being tendered out by NTPC yesterday. So those three power plants are worth around 80,000 crores. So what will be our scope of work and what is the opportunity size for those projects?
I will again tell what I have touched upon in the beginning. You see, to be brief on that, the order flow which has come on VHL and L&T together is about nearly 1,55,000 crores in the last 1 year. And the L&T, they asked to proceed with about 4,000 megawatts for Nabinagar and Gadadwara, 27,523 crores. And BHL also, today the news headline has come also about the Telangana job of 16,000 crores also. Because they had an opportunity to match the L1 price. Even though in all the three areas, in all the three, plants, L&T was the L1, based on the tender conditions, BHL is getting that another order of 16,000 crores from Telangana, that is boosting up there for this one. For in this, where are the segments of the opportunities on the ETC business, that is the installation business of the main plant equipment, and then the civil and structural works, and then some of the balance of plant works in terms of wherever you can take coal handling and other areas and balance of plant civil works. And apart from that itself comes on about 30,000 crores of opportunities. Apart from that, what BHL and Adani has to do is that the Adani has only placed order on the main plant, that is the BTG, for about 10,900 megawatt. Now all these plants, for facilitating the completion of the main plant, they have to order the balance of plant works. There are a lot of other miscellaneous works like coal handling, material handling, then ash handling, then water systems and all. Therefore, those will also come for tendering. And we have to see where we can fit in. But NTPC also precisely also for this 6,400 megawatt, which they are now almost everything is in the pipeline for both BHL and L&T. This also balance of plant they have to tender it out. That they cannot delay it. That will also come as an opportunity. That's why, and more than that, I told you another 14,000 megawatts. 11,440 megawatts tendering is in the pipeline. That has to happen. Therefore, the next 2 to 3 years, 2 years at least, there will be a lot of flow expected on the power sector business.
Okay. Sir, thank you for this, sir. But what is about timeline? When BTG is tendered out, so when is the balance of plant usually gets tendered out to you? Any timeline you can?
Balance of plant, they should be doing it because they cannot delay it. In a couple of months, it should happen. Because already they would have done the documentation, maybe they have to call the tenders and what packaging they will do, whether a single package or a multiple package, that has to be seen by NTPC. Whereas in the case of Adani, they have got in-house capabilities to do package-wise tendering in terms of various areas like mechanical, electrical, and then civil packages and structural packages. That also they will be starting it, all those areas.
Okay. Thank you, sir. Thank you, sir. Yeah, that's it from my side.
Thank you. The next question is from the line of Sunil Kothari from Unique PMS. Please go ahead.
Thank you, sir, for opportunity. I'm little new to the company, so sir, would you like to
talk something more about, it seems the opportunity is very huge. Maybe in a year or two, it will accelerate for next 4 to 5 years. So which are the area where you feel you require to strengthen your inside capability in terms of management, team, equipment, capex? Where are you feel you require to create more capability?
Yeah, thank you. Thanks for the question. I feel we are working towards increasing capability in the civil space, especially because it's relatively compared to what our core activities compared to our core activities in the power sector, especially mechanical works that the company was founded on. So civil works is what we think we have to, and we are working on it. We have been enhancing our teams, especially at a leadership level and also at the ground level execution teams. And we are also gearing up to become adding more engineering capability within the organization. So to take up more engineering procurement and construction contracts, not an entire power plant like Ramaya sir and I had touched upon earlier. Parts of a power plant where we think we can build on our 25 years of experience. Like BOP is something that we thought we could do. So we are trying to build some engineering expertise for the next 5 to 10 years to be able to cater to decent amount of BOP EPC jobs. And naturally, I think O&M, we are making good strides in the O&M space, operation maintenance of power plants, but we feel there's still a lot to do in terms of skill enhancement and the kind of power plant, thermal power plants especially, that are going to come up over the next 5 years to 10 years. So we need to be ready with numbers there. More than quality or skills, we need to be ready with number of people, because the last 10 years have seen a lot of people not join this sector. There is a dearth of talent. Yeah.
And something you can talk about, just covering your vast experience of the past and the industry which made a lot of mistakes and get so much in trouble. So what has changed? What precaution we are taking that we do not make mistake, or even if there is something wrong, we can come out maybe little with little injury, because ultimately infrastructure and related all these things, sometimes at some over a time it creates a very challenging environment in terms of competition, in terms of payment, in terms of project stalling and all things. So how prepared and ready we are with our past experience that we will not make mistakes and will take care for future?
I think, as Rohit has said, we are a 25-year-old company. A lot of learning has gone into the system, and perhaps on the O&M sector, perhaps we are in the front side. We are the leaders in doing the things, and we are not keeping quite with that. We are trying to strengthen the organization setup and the quality and the skills of the people. That is where the valuation comes there. But in the overall perspective, particularly in the normal installation job, there is a bit of a challenge. A routine job, but a lot of full work is required in terms of proper resource planning. Our planning and project management systems have to always be on track. Of course, we have got a very robust system on that. Perhaps it is front-led by Kishore Babu himself. Many times he goes to the sites and sees the problem-solving approach, and Rohit also is doing the same thing. And we have got a lot of leaders in different segments. We've got 10 SBOs, for example, which is in various segments and all, who are specialized in various areas, and that specialization is being strengthened in terms of engineering procurement also, with some of the new blood we have taken with a lot of experience. But from the customer side, the major issues are the fixing the overall scope definition of the project. That is a very big task. Particularly the standard packages of power plant, there is nothing big a challenge. Like Adani is doing like a very routine thing, because they are quite used to it. NTPC is quite used to it. BHL, the problem with BHL, maybe working capital issues can be there. Otherwise, they have got a huge capacities, 15,000 megawatt capacities. They have got a lot of quality people. Everything is there. Only thing, the supply chain and then working capital, that is where this type of projects can have some issues here and there. And more or less, in most of these sites, the problem, what happens, we have seen many of the projects are delayed due to access issues, because the land is not fully available. There are other statutory clearances are not taken, forest clearances are not there, right of the way is not there. And then these are the things when you are interfaced, when the project starts with a clean slate, then the project will go faster. But when a project is taken with 50% land and 50% the progressively they acquire it, then the problem starts. Then the whole thing, gets a little bit of a issue into that, delays and all those things. The proper integration of engineering, supply chain, manufacturing, and more importantly, the construction, which is our specialization, that has to be integrated. Ultimately, customer has to do it, everybody has to do their duty into that. But we are much better doing things better. I don't think those days are gone where projects will take so much of delay. Power plants are being put up in 3 years now. It is not such a 3 to 4 years it is being put up. And then even railway jobs and then road projects are also coming very faster. We are also experiencing that. We have done many of the road projects and the railway jobs. We are doing over 24 railway jobs. A lot of learning is there and it is doable. Therefore, the challenge comes when we do with the engineering, supply chain side. That is where a lot of care is required, a lot of working capital management is required, and a lot of pushing around the engineering and supply, procurement and execution has to be properly interfaced. And the same thing goes up also in the customer side also. They have to do ordering in time, they have to get the access into the site, then they have to finalize their engineering specifications, tender specifications in time. All these things are a standard practice which has to be followed, but sometimes there are some delays that we have to make it up somehow.
Great, sir. Just last question. How you see competitive scenario happening or changing now?
You mean to say our area of the business?
Yes, sir.
Now, I will tell you 2-3 areas. Perhaps in the power sector, we are the peers now. I can boldly say that because of the strength we have established. In fact, today the capacities what we built up in supervision, engineering people, site execution, and then supply chain in terms of the labor, piece rate workers. We can say around 15 to 16,000 people are deployed on the various sites for the labor itself. That shows the strength of the organization. Perhaps very few organizations have got that capabilities. Therefore, that drives us into the front compared to the others, particularly with the private customers like Adani. Even BHL also doesn't feel that they have got such a big competition because now so much of tendering has to be done. Nearly about 23,000 megawatts they have got on their plate. And their capacity is 15,000 megawatts on paper. Of course, over the years, because of the lack of interest in the power sector, the annual capacity has come down to 3,200 megawatt per year. Now they have to ramp up to 8 to 10,000, then 12 to 14,000 megawatts in the next 3-4 years. Generally, these 80,000 megawatts can be achieved by end of the decade. Therefore, these are the areas everybody has to rope in and get across their acts.
Yes, sir. Thanks a lot for a very detailed answer. Thank you very much.
Thank you. The next question is from the line of Manthan Zaveri from Nexa Securities. Please go ahead.
Hello.
You are audible, sir. Please go ahead.
Yes. Sir, so on the MDO order, you said that 2,100 crore will be the peak revenues in FY28. So from FY28 onward, this 2,100 crore will be recurring revenue for every year, or is there some different calculations from FY at 28?
Yes, sir. It's going to be an annual recurring revenue for the next 25 years, excluding the price variation. So you include, excluding PV.
Okay. So approximately 2,000 crore will be recurring revenue for the 25 years from this mines, and this won't be related to offtake. Or
no, it won't be for 25 years. I'm sorry, it's going to be for 23 years because we
okay 23
2 years for development. Yes.
You can do years for. Yes, and sir, as our order book is gaining traction in O&M side, and you also mentioned that O&M has relatively higher margins than our other segments. So, is there any scope of further improvement in margins? We have been consistent around in this 11 to 12% band. So, is there any further scope of improvement since our O&M order book is improving?
Yes, sir. There is a possibility because the moment we increase our O&M segment and MDO segment added to the portfolio, there will be expectation of 1 to 1.5% growth in EBITDA margin over a period of next 3 to 4 years.
And overseas is also contributing quite significantly to our O&M revenues. Last year we did overseas O&M of around 200 crores, and this year we anticipate to do 235 to 240 crores. So you can expect to see the same trend over the next 7 to 8 years. Overseas O&M growing at a rate of 30-35% CAGR, and EBITDA margins are in the range of 17 to 19% in the overseas.
So overseas O&M is 17 to 19%. You are saying?
Yes.
So can we expect improvement in H2 of FY25 in EBITDA margins?
Yes, sir, because the turnover will be more in H2. So the O&M also new projects we added during Q2. So there is a chance of getting more margins in O&M side. So we may get more margin improvement in the off year also.
Yeah. One more thing, the new installation jobs which is coming up in the boiler and turbine packages, the realization of the rate per ton is better than the previous years. That can also bring some better margin.
Okay. And sir, since we are operating with these 2 large MD orders, so in terms of capability and operational capabilities, is this somewhere hampering our bidding in other lines of business, or it's not affected in terms of manpower and everything? So
these 2 MDOs were operating under separate SPVs, sir. So there is separate manpower. We are handled by the separate team. So Power Mech team is only supervising as a promoter. We are monitoring the operations of the SPVs. So there is no impact on the mining operations on the existing MSS.
Thanks a lot.
Thank you. Ladies and gentlemen, we will take that as our last question for today. I would now like to hand the conference over to Ms. Natasha Jain for closing comments. Over to you, ma'am. Ms. Natasha Jain, you are not audible.
Am I audible now?
Yes, you are audible, ma'am. Please go ahead.
Yeah, thank you. I would now request the management to give closing remarks, if any.
Yeah, I think we have touched upon many aspects of the business growth, the opportunity size available, the revenue growth, and the EBITDA margins, how it should be further strengthened in the coming months and all. What we can say is that the investment climate is pretty good in the power sector, in the non-power sector, railways, infrastructure, and then other segments also. Therefore, the company continues to be bullish on its growth path. 4,200 crores last year, and we should touch upon 5,000 around that or a little bit more. In the last 2 quarters already, revenues will be more. And Rohit has given a broad spectrum of the order flow expected and the figure. And looking at the opportunities available, we should try to get whatever is possible. And then the opportunities available will be more in the coming years. The government is fully committed for more and more investments in energy sector, infrastructure sector, and then so many other sectors there, and then steel sector also. Therefore, we have to see where all the, and then green hydrogen, which Rohit has touched upon. Therefore, there are new segments also is coming up, and then we'll keep them focusing on new segments. That is one of the USPs of Power Mech. We will always look for new opportunities, and that is how our growth should be sustained. Thank you very much.
Thank you, sir. That concludes the conference. Participants can now disconnect their lines.
Thank you.
Thank you. On behalf of Nirmal Bang Institutional Equities, that concludes this conference. Thank you all for joining us. You may now disconnect.